Totally. All right, Emily, you want to get started? I think we're live, right? So,
Yes, let's get started. We are waiting on one more panelist due to technical difficulties, but hopefully he'll be joining us soon. We can go ahead and get started. And just a quick note, if you have any questions during the session, feel free to drop them into the Q&A box at any time. We're going to be doing a live Q&A portion towards the end of our webinar where your questions can be answered. But without further ado, I'll hand things over to your moderator for today's session, CEO Super Dispatch, Matt Bradley.
hi everybody. Thank you for joining. We have look at that, real time. Scott coming on real time. Perfect timing. Okay, so I think this is an exciting webinar. We do this every once in a while. First, I want to say thank you, Doug, to you and Scott, to you guys for joining. I want to thank you guys for being customers. I want to thank you for the feedback you give us from a product perspective. It helps make us better. Um, the topic today is state of auto transport, and um, we know that the industry is evolving faster than ever, and the insights that we are uncovering as a company, we're trying to share with the market. And we put out our first ever State of the Auto Transport report. And so, what we thought we could do today is have two practitioners, Doug and Scott, who are in the field every day, talk about sort of their experience and how it relates to the transport report and how you guys are using the transport report. And, really just have a fun, lovable, friendly discussion about auto transport. That sound good?
Sure. Yes, sir. Sounds good.
All right. So let's do quick introductions. Doug, maybe just you could introduce yourself and your company first. And then I think just one thing before you do that, I think the thing that's interesting about this group is we have a broker, but we also have a broker and a carrier. And so I think and you operate in different parts of the market in some ways. And so you'll get sort of unique and varying perspectives from our customer base. And so Doug, kick it off. Tell us all about you.
Yeah, man. So we are the broker only guy over here at Tarpon Transportation. Business was established in '04, and we were founded actually just shipping freight, no cars. And then I'd say right around 2015, 2016, we started dabbling in the car market industry. And since then, our business model has pretty much switched to 80% auto transport and about 20% freight. And then we were introduced to Super Dispatch last October, and it has definitely helped the processes used in the office. It's very fluid. It's very intuitive. My team loves it. So we're honored to be invited to this webinar. And I'll let Scott introduce himself.
Are you there? Can you hear me, Matt?
We can hear you. You're on.
Okay, super. So we're based in Montana, and we kind of cover with our own trucks about 9-10 states in the Western US. We haul all used cars, no new car freight. We have the ability to in the insurance, but just because of damage and stuff, we kind of veer away from it as a company. But and then we also have a website, and we broker as well all across the U.S. and to Canada and Hawaii, and so we actually have both. We have 15 of our own trucks right now. We bounce around between 14 and 18. So that's kind of us. We've been around for 25 years, and actually I got Vonda here with me, who actually dispatches our trucks daily in our own fleet. And then I think a few people from our website are logged on, but and we built our own site from scratch over the last 10 years. So that's kind of what we do.
Cool. Okay. Well, thank you for joining, guys. I think the first topic that we want to cover is, just sort of what you're seeing in a pricing trends perspective in auto transport and what's happening. And so we have a little segment in the report that talks about how when you move multiple cars, you can see discounts, sort of like bulk-based buying, and we call out the different rates per mile, and if you move 6 cars versus 1 car, you can on a per mile basis save about 26%. Is that something you guys see happening? Do you even think about that? Is that real? Is that not real?
That's what we do with our own trucks on a daily basis is in the old days, dealers would go to auctions and would fill a truckload. The first 15 years we were doing this, and not all of them, but for the most part, strong buyers would buy a truckload or two, and it was a lot easier. And nowadays, even before COVID, and then and definitely after, many of these buyers are going just on the internet and buying, and so that and competition for the cars got tougher because it opened the door for quadruple the number of buyers. So it's normal for a dealer to get on and buy 1 to 5 cars, and so we just have certain rules. If you don't have X amount of cars, then we need to leave them sit till next week if they buy every week, because you're trying to put together a load. And a lot of times we have multiple clients in one city so we can match their freight. So yes, loads, is how we get a discount, and we know our buyers that buy heavier compared to the ones that buy singles, and they may have a rate difference. Some of them will allow the cars to stack up for a week or two till they can fill a truck to get a better rate. But yeah, even when we broker freight, through the website, we give a discount if somebody books 2 units. I think we knock 5% off the second unit.
Did we lose audio, or is that just me?
I'm not hearing Scott.
Might have cut out right there.
That's okay. While Scott's working his audio. Oh, you're back.
Yeah, I don't know what happened there.
That's okay. Doug, what are you seeing from, do you tend
Yeah,
to use multiple cars?
the when you got multiple cars, it's fantastic in my opinion. It's more attractive for everyone, right? So the carrier that I'm contracting, he's like, oh, this guy's got 2, 3 cars, so I don't need to fill my trailer. And then we use a lot of 2, 3 car guys, so instead of carrier ABC going to pick up just a single unit, he says, okay, I can load 3 here and deliver 3 here. I don't have to go to dealership X and dealership Y and dealership Z to make my pickups. And when you add all those other pickups and deliveries, you're adding unforeseen variables. You get to a dealership and the dealership's like, oh, that car is not ready, it's still getting detailed and it's going through PDI, it'll be 3 more hours. So now you're waiting at a dealership for 3 more hours, right? Just these issues like that. And so when you have these multi-unit runs, your rate goes down. The carrier takes it for less per car than if it was a single unit, and then I can take that savings and pass it on to the client. So it's like, oh, you want to ship 1 car? And well, that's $700 for this lane. You want to ship 3 cars? That's $500 per car. So it's more attractive for everyone. It's smoother for the driver. It's cheaper for the customer. And from a broker perspective, I know it'll book faster because it's just a overall win-win for everyone.
Yep. Okay.
So
And what
client gets
what do you
better
guys-
rate, it's delivered faster, it's less headaches for the driver. So
Yep.
We
Okay. And what
also,
else? Go
where
ahead.
we're at,
Scott.
Matt, is size. Weight is the key to everything in car hauling. And so, we have an extra charge if it's, has a battery, like the Lightning or whatever, the Ford truck. I mean, those things are so heavy, even the 1/2 ton. And so it's all about weight. That's, anymore with the 80 footers, the quick load 80 footers, which is our entire fleet. You can fit almost anything you want on it. You run out of weight before you run out of room. And so, obviously we have a lot of clients. We have a different rate for a truck or a large SUV versus a car.
Yep.
100%.
Yep. No, that's super interesting. And like, weight, as you're saying, number of cars you move drives price, weight of vehicle drives price. One of the things we talked about a couple weeks ago when we did our sort of pre-version of this is we talked about what we're really seeing or what you guys are seeing out of the Florida market right now. Is that, is that still happening? Are you seeing sort of weather or migratory demand changes that exist? Doug, you were talking about that a couple weeks ago.
Yeah, and I know Scott had also mentioned the snowbird effect, and I have seen a slow but sure drop in these Florida outbound rates. They're finally starting to normal out a little bit because a couple weeks ago, I had clients asking me, why are these prices so high? Why aren't these cars moving quickly? So on and so forth. And you gotta let them know it's not me trying to charge you too much or trying to not get your car delivered, because let's be honest, the sooner I deliver your car, the sooner you pay me. It's the nature of the market, and we have to abide by the market. When there's an extreme demand in an area, right, and you have not as many trucks as you need, it's going to cost more, it's going to take more time, right? So all the snowbirds moving southeast back up to the northeast creates that.
The other problem it creates too is if somebody books a unit going from like Miami to North Carolina, you got to hit them the snowbird rate, because nobody is going to stop halfway and dump a car and leave off a unit that could go to New York, and they'd get another $300-400 on the truck. So the people in the middle of those snowbird routes just get crucified by rates, and there's not really any way, unless you find a niche carrier who doesn't want to play in that game. Those people in the middle suffer at the peak of each way of that season, and it happens for Minnesota to Texas, even Montana. Most of all the people out of Montana go to Arizona for the winter, but our population's so much smaller that it doesn't really have a ripple effect like it does on the East Coast. That's the number one area.
Cool.
Yeah, the rate per mile going up, like Scott was just saying, from Florida to North Carolina, South Carolina, Georgia, that southeast area can be pretty aggressive coming out of Florida.
Yeah. Yeah, these are great insights. What about like operational costs like fuel or labor or any of that type of stuff? You seen any changes there?
We have
I think Scott
ahead,
could
Doug.
speak better on the operational cost side of things, because I'm strictly broker and I just pay attention to the market trends. I don't have much of a dip into the operational cost, but I'm sure Scott does, being that he has his own fleet and I strictly broker all these transports.
Yeah, I just had to ask Vonda. I couldn't remember, but we have a fuel surcharge that we've had in place for years. And so it starts at $2.50 a gallon, which actually Montana has a pretty hefty diesel tax. So it isn't like we're getting super cheap freight normally. But California is obviously the highest in our area. And so we blend three different rates to kind of come to a common uh, fuel surcharge that we add to every unit or to the price of the load. It's just what we have to do.
Okay, cool.
Honestly, went up 2%. Yeah,
I think so I think that's good on pricing. I think there's one question from the audience. I'll sort of take questions from the audience as we go. One of the good questions is, do you guys use any tools or calculators to help you price?
I don't know. Do you have a base mile? You could talk on that. I mean, yeah. Go ahead, Doug.
Yeah, okay. I would say, I think one of the great tools is your Super Dispatch pricing insight tool. Get a feel of what's going on. I also like you have a confidence interval, like, hey, we're X amount of confidence on this rate. So it's very helpful for a broker to see these other rates going on. And then of course you want to check your own history, right? Like, hey, I moved this lane 30 times last month. Let's be consistent. And of course the client wants you to be consistent too. You can't just change your rates week after week. And then being in the industry, not as long as Scott, but been doing it for just over a decade, you learn markets. You see certain places, you tell yourself, regardless of any tools you may use online, any pricing insights, anything like that, because you're doing, this is going to cost X amount of dollars or should cost X amount of dollars. pending there's no weird issue with the economy or with tariffs. Or shoot, I had a client say, hey, I have this vehicle in LA, can you please get it out as fast as you possibly can because of the ice raids out in California. So that's something where I would quote higher because the need to get it out of there so it potentially doesn't get vandalized. That's a very one-off situation, but there's, world and political influence that can shift something in a odd way, if you will. But generally, I think it's smart to always use your gut when it comes to pricing and, consider the miles, consider the size of the truck, and just, what you know.
Yep.
Yeah, it's like we track our fleet and what it does per mile, and so we base that off of that somewhat, because the fuel's not a factor in with our fuel surcharge. But like Doug was saying, when it comes to broker stuff, money is speed, and we tell that to a client is like, we say, hey, we can get your vehicle delivered in usually a couple weeks to anywhere in the country, depending on, there's some deep dark holes like the Daniel Boone National Forest and some stuff that are no man's land that are hard. But at the end of the day, if the customers out there have no idea what is involved in car hauling and the details that go behind it and the logistics. And so they just think that, like, they're like, okay, well, you can be here at 4 p.m. on Friday because I'm going to the airport then. I need my car picked up then. And you go, no, that is not how it works. We need a 3 to 5 day window to pick it up. And someone needs to be there, or a neighbor, and the logistics behind it. And so sometimes if they're like, well, that doesn't work for me, then you can say, well, let me call a couple carriers I use in that area. And then you can say, hey, if I got to have you there on this day and this time, what do you want? And the sky's the limit. You kind of have to fish for a price there if they're super demanding, which doesn't happen all the time. You can usually talk to them and get them clued into how it really works. But what these customers expect sometimes is fairly crazy for a decent price, But
Yeah, totally. Okay, so I think this is good. Hey, by the way, just for the audience, we're going for another 35 minutes. So, and we have a couple other topics and segments we're going to cover, and then we'll come back to some more questions that you all
Okay.
have. The second part of it. So, first part was pricing. Second part is high volume routes, how you see concentration playing out. There's a part in the state of the auto transport report where we talk about the high volume lanes, for example, New York to Miami, Miami to New York, LA to Dallas. How do you guys think about, and you talked about this a little bit as it relates to pricing, but how do you guys think about, working with your customers or deploying your fleet in a way to optimize for routes and improve delivery times? Do you want to take that first, Scott, or because I know
sure.
you have a fleet?
Yeah, so like I said, most of if it's out of auctions, which with our fleet, probably 2/3 of the freight we touch are out of auto auctions in the Western US. Then we do rental car stuff that you get at airports or rental car centers, and then some repos that you go to repo yards. But basically, we have 100 and some stops in our area that our drivers are used to, and so we're always after enough freight in those lanes to deliver as quick as we can. And our goal is to deliver within 1 to 7 days in those 9 states. And for the most part, Vonda does an excellent job. Sometimes sales or trends can foul that up a little bit, where delivery can be slower, or things happen. We deal with some extreme weather in the north, and you'll get a lot of carriers that don't want to come north in the winter, and rates do go up going north to south in the winter due to that. And so, most people that run the I-10 east and west don't want to come up and deal with -20-degree weather, and there's so many logistics to that, and the fluid, your hydraulic fluid needs to be airplane hydraulic fluid and blah blah blah. But it's I mean, I guess I don't know if I answered the question, but we target areas and we know our trucks are going into Spokane, say, which is a huge auction in the Northwest. We'll have 4 or 5 trucks in there a week and then Vonda will route them out to where, to the cities we go to. And then you drop along the way, Seattle, Eugene, Oregon, Boise, Salt Lake. And so normally you kind of get a somewhat straight snaky route and drop 2, 3 different dealer stuff because like you said, full loads are rare nowadays. So you do have to kind of motor around, which drives the price up as we already covered. So
Yep. Yep. And Doug, what are you seeing from a like a high traffic route perspective? I know you guys are in
Yeah.
Florida.
So, I mean, for me, I love high traffic routes. I mean, I'm a big shipper in the state of Florida. So to kind of Scott was talking about Northwest out there. I don't deal too much in that. I have much more clientele Southeast, Texas, Midwest. But like in Florida per se, when like I guess you could say a high traffic Florida route would be Central Florida to South Florida, right? So that's when I get that transport, it books same day. It books same day, and if it's close enough, it'll deliver same day. If not, it'll at worst case scenario deliver next day. I mean, I'm a huge fan of the high traffic routes, especially in Florida. Customers get their car right on time. I have tons of relationships with dealers and carriers down in South Florida, Central West Florida, Tampa, where we're located. So that's like bread and butter to me. Like it gets tougher when you have to service the, I guess, low traffic routes, if you will, where, someone wants me to ship their vehicle up to like Sioux Falls, South Dakota. I'm sitting here for like 4 or 5 days finding a carrier willing to do that. And it's, the vehicle sitting in Hialeah Gardens, Florida. So the high traffic routes, that's I'm all about that. And it's I know in the panel discussion here it says improving delivery times, that they improve delivery times on their own because they're desirable. I'm not sitting here waiting for someone to finally put a bid on this, load going out to middle of nowhere United States, especially when it's a longer haul.
Okay. I think those are great insights. Do you guys do anything around like, more on the broker side, looking for customers that tend to have vehicles in higher traffic route areas because it's
Yeah, most definitely. When we're selling and whatnot, it's ideal to try to find, people with home bases in these hotter areas, not just in Florida, but DFW area. We've got some good pull up in PA. It's a lot more local hauls in PA, but we're starting to establish relationships up there. To be honest, when you get real tied up in the Northeast, you get to like, your Rhode Islands, Massachusetts, New Hampshire's. Not a huge fan. Very expensive. Doesn't seem like there's a ton of options out there. But yeah, when selling, trying to find someone who is in an area that is geographically desirable is always a good thing. I'm probably not gonna, call a business that's located in North Dakota and say, hey, can I help you ship your cars? I mean, why not? But
yeah, that's because they'll call us.
it's gonna turn into a territory
Right.
war here.
Actually, that's something we try and price fairly across the country, and from the website, that stuff. I mean, we might only broker 1% of the freight to our own trucks, just because of population centers is where you book more, but we don't target certain routes. Sometimes we do a little bit, but the huge thing for the carriers out there that are listening, from the broker standpoint that Doug and I are at, and I know we're going to touch on a little later, is pricing. Is you got to have consistent pricing, because then we can go cut deals, or set our pricing to target customers. I don't mind making a thinner profit margin if I know I have a great carrier who doesn't have Lloyd's of London insurance. And that's a biggie. We lose carriers every year, great carriers, because they go to it and insurance is expensive, but no Lloyd's of London, please. But so anyway, we'd love to go. I'd like to make a smaller margin if I could book 10 or 20 more units, but the pricing has to stay consistent for a period of time. Like I was talking to Vonda, and we target customers for our own trucks that are loyal, and they pay a little bit more on the rate, and so we really haven't adjusted our rates much in the last few years, partially because the economy was down a bit and new car sales were down, and so everybody keeps their used car and fixes it, and so brokered freight around the country shrunk a fair bit in the last few years, and so we just didn't feel comfortable raising our prices, but we've had the prices raised on us by carriers we use all across the United States, and they're like, "Hey, costs are going up, things are more expensive." And I'm like, "Yes, I understand this, but there has to be somewhat of a consistency of a 6 month guarantee or something." I mean, obviously in the snowbird lane, we know when it changes. I mean, we got it on a calendar within about 7 to 10 days. You can hit that mark every single year. Last year it was delayed a little bit due to some weather and some stuff that backed up leaving Florida, that kind of fouled everybody up, because a lot of people wait and they know when that snowbird lane ends, and then they try and book, and they'll move a few weeks after it ends to get a cheaper move. But last year it was delayed longer. It ran, at least for us, it ran 2, 3 weeks longer getting the clogged up freight out of there. But all in all is if we can get some consistency, and we talked about that. Maybe there's a way through Super Dispatch to do something like that down the road.
Yep. Okay, so I think you're hitting on weather and natural disasters. So it's sort of natural segue to what is topic 3, which is, you all and the carriers that you work with, if it's not your own carrier, face challenges every day. Some of them are predictable, some of them are not. Doug, you're in Tampa. That's home base for hurricane season coming up soon. How do you guys? And there's a part of the state of the auto transport report that talks about the impact that you see to demand and deliveries immediately prior to a hurricane versus post hurricane. I don't know how much. What are you seeing, Doug? Just from as hurricane season
All right,
hits, what
so
happens?
obviously these, acts of God, these hurricanes, scare the hell out of people, right? So instead of these people saying, "Hey, deliver it on, by Monday because the storm's supposed to come in on Thursday," they will rather just say, "I don't want it. I'm not taking possession of it because it could get, damaged, washed away, flooded out." So they'll just put it back on the fleet company and say, "Hey, we're not taking this vehicle." So that, in my opinion, is the better option for them to do. Again, we do have a lot of Central West Florida clientele, and that's where the storms can really disrupt, especially when they slip up under, like, come from the Atlantic and then slip up under into the Gulf. And then it's like, okay, are we going to Louisiana, Mississippi, Texas, or Florida? Right. And so it's unpredictable, but a lot of these people will just freeze and stop the deliveries, regardless of the potential trajectory of the storm. So in those times, you just kind of wait and pray, at least the client does. And they don't want to take possession of it, because once they take possession of it, it's now on them. But if they leave it with the dealership or, the fleet company, or the purchaser, I should say, they void that liability. So it just kind of freezes. And then we usually, if like last year we had to evacuate, we had a storm I think it was Milton that was like a direct shot for Tampa, and then it just bumped just south of us, and we got spared again. Um, and I evacuated with my family down in South Florida. We had all the people, our people like working remote and trying to make all that happen. But it just kind of freezes for Florida. But we also service the whole United States, and like some people don't even know that a hurricane's coming. Like that kind of news is very central to us here in Florida or any other place that may be affected. But other people are like, hey, what's going on? Where's my car? It's like, oh, sorry, we're understaffed. Like our houses might float away here in the next day or so. So I don't know. It's an unpredictable um situation, and things just kind of stand still. But being that I'm a broker that services the entire United States, I can't completely stand still, right? That's how you lose clients. You say, oh, I'm sorry, there's a Cat 5 hurricane headed to my house, but you are in, I don't know, Iowa, so you don't give a damn about a hurricane and you need your card. So it's can be tough to service. That, but
So
Yep.
we deal with winter. That's our big thing. And most of our clients, since we're in the West, understand that there's a pass that by Reno going into California that's always closed and stuff. So for the most part, for our normal clients with our own trucks, they're aware of what's happening. We slow down the winter. A big thing we face is rock chips, right? They're sanding roads and whatnot, and what you do to protect yourself on damage, because that's the big nemesis in car hauling is damage, right? And proof of it, which is why we love Super Dispatch so much, is we can require a certain amount of pictures and what we want, and it's great. But it's you can get in some squabbles over a few rock chips. If you're hauling a used car out of an auction and they bought it online and they're looking at it on camera photos online 1,000 miles away from where the car is, can you see a little teeny rock chip or not? No. And so, our drivers have to be really careful on damage reports, and sometimes you show up and the car's covered in snow because a blizzard hit. Well, our guys still move 24 hours a day, even in that weather, unless the roads are completely shut down. So then, do you have them dust off a brand new car and potentially scratch it, or do you have them load it? And sometimes it's up to the driver, and because that damage, we do a performance bonus pool deal, so some of that goes back on them to make sure they do a good job. But weather's a big factor in damage and protecting yourself. And hail too. That's an act of God, and so we don't cover it, but you'll get a client who's like, I expect you to cover my cars because they were hailed on while you were carrying them. We're like, that's an act of God. I can't control that. And in the
Yep.
old days, rental car companies were pretty notorious for trying to force you to cover it, and they've kind of gotten away from that. And on POV stuff, they know they have to cover it because we tell them in our introductory chat. But dealing with big clients, sometimes hail can be a big issue, and we have a lot of it up here.
Got it. Okay, I think these are great insights. I think just one last question for you, and then we'll take some of the questions from the audience. We talk a little bit about future projections and industry projections and what's going to happen. What do you guys think is going to happen? What's your big sort of change that you see coming maybe next year or a few years from now as it relates to auto transport?
Well, if you're not running with full cameras, you're missing the boat, because it's protected us in several different deals where our driver would have been cited with a ticket, and they get out of them because you can re-show the footage to the police officer or the highway patrolman. So, cameras and all that stuff to protect yourself. I go to the AHA conventions and stuff, and they're talking about these trucks that can drive themselves. And I have no fear of that, because you're always going to need somebody to load and unload, in at least in my lifetime, I believe. And so I don't fear that type of thing, where trucks that can drive themselves. That's non-existent in our world. Um, what's
What did you
that?
say, Doug? You said you.
I second these autonomous driving trucks. In my lifetime either, I don't see that becoming a thing. Not just because of the loading and unloading, but also the insurance. Like,
Yeah.
who's that on?
Yeah.
I think it's
I
kind of
and to me, and to even try and do it, you'd have to have staging yards, and there's a lot of companies we use that have certain staging yards and whatnot, but most of the world can't have staging yards everywhere they go unless they just run dedicated routes with staging yards, and so it's going to be non-existent in our careers. So that I don't fear. Some of the things that have hurt the industry and driven prices up is some of the what they're doing with the fuel and emissions and stuff. And usually California drives that and then the rest of the world follows suit. But that DEF stuff was a nightmare going through all that for years and years and modifying it. And it still causes us all kinds of maintenance issues. Where the regen isn't working right and people on your webcast here they're all shaking their head going, oh my God, that's a nightmare. Yeah. So just hopefully that stuff backs off a little bit. That stuff's really hard on us when your trucks are in the shop all the time because a sensor on the DEF fluid unit pinged bad and it put your truck into limp mode and you got to drive 15 miles an hour for 100 miles to get to a shop. It's just horrid, and that slows down our fleet. Hopefully that stuff backs off.
Okay. I think that's good insight. Doug, what are you seeing as sort of like the big,
like to
what are the big
prepare for the
changes?
future.
Yep.
Like, so, I mean, this is nothing new. I do think it's very important to keep pricing as tight as you can, with respect to the margins and, people have to eat and whatnot. But there's new competition in the market every single day. I mean, I'm scrolling like Instagram and I get 10 different ads from I can ship your car, use this shipping company, use that shipping company. So you're constantly going to be fighting against potentially illegitimate companies or underqualified companies that are trying to win business strictly over rate, right? So I think it's key to not get complacent with your clientele and get to the point where you feel like you can kind of charge whatever, that they're always going to use you and they're loyal. I've been in the business for just over 11 years, and I've seen customers who I've worked with for years essentially just say, we love you, man. It's been great, but this guy's rates are this much cheaper. And they feel like maybe I was taking advantage of them for years when that's not the case. Someone managed to way undercut market rates, and you lose clients because unfortunately people are not loyal, and not only are they not loyal, they're just always looking for the cheapest price. Because when you have a larger client, it's all about bottom line. How cheap can we get this done? And then eventually it shakes out. It's like, oh wow, this new cheap guy is actually kind of a piece of garbage, and he doesn't really care. And then sometimes they come crawling back, other times they don't. Point is, don't get complacent with your pricing. You've got to keep it competitive. You've got to follow trends, because you'll get left behind if you think you can just always give the same rate again, again, and again, because people will look for other answers. I mean, clients are getting poached every day. Sales calls, sales emails. Let me get a chance to quote. Let me get a chance to quote. It's like, well, Doug's been moving this lane for the last 3 years, and he's always at $500. And well, this guy's telling me he'll do it for $400 every time. We should give this guy a shot. And they won't even ask you. They won't even say like, hey man, I got a better quote on this. Can we revisit this quote and see if we can sharpen the pencil on that a little bit? You don't get that. People generally are not loyal, and they're just very price driven. So paying attention to your pricing to your clients is key in order to maintain your book of business and maintain your future in the transport industry.
You're always going to have people that jump ship due to pricing, but like Doug was saying, that customer that goes with that $400 carrier wait till they have a damage that needs to be handled properly. And Doug would handle it properly, but some of these companies get in and cut the price and they don't handle that. So the carriers that are out there listening, if there's a damage, I don't care how big or small or whatever it is, you need somebody inside your company that can address this quickly because that upsets customers. And we put a lot of companies on the do not use or don't haul list because they don't handle their damages properly because that's a major thing. Which obviously your guys's setup is perfect for damage. I mean, it's great. You got to take the photos on the beginning and the end, and
Yep.
and we have penalties in there if they don't do it. And so you got to handle the little things, and that'll bring your clients back when they get stung by those fly-by-night people, is what we call them, and the rate cutters. We don't cut rate to get freight. We just figure that our reputation and with our own trucks in a 9-state area where we're known pretty well, that usually prevails. But people are always you're gonna lose a customer over rates. It just happens.
Yeah.
Yep. I think these are great insights. I think, hey, we have 25-ish questions and we
Okay.
have we have 13 minutes. So the good news is that these questions can be grouped into logical blocks and they're not 25 unique questions. So I think the first question, and this comes from a few different folks, but what are the steps brokers take to manage risk? How do you vet carriers to ensure they're legit? Let's start there and then I have a follow-up that's
Well,
very specific to you, Scott.
Yeah, that's become a massive topic. And basically, my dispatchers spend a quarter of their day vetting carriers, and it's you gotta ask for their equipment list to make sure the VINs are on there. We even have clients take photos of the truck that pulls up because the old bait and swap deal where somebody has one truck and it's parked in Ohio at a yard and it never moves, and then all of a sudden a truck pops up because they have to activate it to take the photos and whatnot, and we see the trucks there, and then all of a sudden it disappears off the radar, and then it pops up when it delivers. And it's pretty easy to vet the insurance. There are some programs out there that you can use. And we have a guy in house that if we really have to get to the bottom of one, he specializes in it. But all of our dispatchers are trained heavily in that. It's such a problem, the double brokering and whatnot. And so if we catch a company doing it even once, they go to our no-haul list. We just don't deal with it. And the other thing is I got nothing against all foreigners coming here and working. It's a great country, but my clients need to be able to speak to someone in English in the translation apps. So we vet the dispatcher and just say, will your driver be able to speak English or not? There's a lot of non-English drivers out there, and that can pose problems with clients. They don't like that. So those are two big things. Insurance and speaking the language are massive in carriers we use and we want to use, because we rank carriers internally. And we rank them 1 to 5, and if they're a 3.5 or above, we have our go-to people we call. There's probably 100 carriers in the US that we can name off. Oh, this route, we call that person. And so in the private side of it, that stuff doesn't factor in as much, because we're hauling our own stuff on our own trucks. But on the brokerage, it's an utter nightmare making sure people are legal and that you're covered. It's kind of a nasty game out there right now.
Yep.
Yeah.
What are you doing to vet risk and
So as Scott just mentioned, it is a nightmare on the broker side. Some of the requirements, we want to make sure they've been running their DOT and or MC number for at least a year, because there's new companies popping up every day, if they're legitimate. The insurance thing, I say, hey, I need you to send me a certificate holder with my company info on it. It needs to come directly from your insurance company. I don't accept like, oh, I'm going to go into like an Adobe thing and type in your company name. No, I need
Right.
to see that insurance cert come directly from the insurance company, right? And then I'll even look to make sure their insurance company is legit. And then we also use tools such as Scott mentioned, making sure on that cargo insurance page they have, you know, X amount of vehicles, right? Because I see carriers on Super Dispatch. It says that this carrier has run 500 loads over the last 60 days, but they have one power unit and they have one power unit listed on their insurance. And no way you're moving 500 loads in 2 months with one power unit. That automatically tells me you're double brokering the freight. And then when stuff is illegally double brokered, it becomes an insurance nightmare. The insurance companies deny the claims because they just said, like, oh, well, the driver who moved this is not on the policy, so your claim is denied. Sorry about the hole in the side of your SUV. Good luck. Another tool we use is just kind of talking to these people and getting a feel for them. You know, you can tell when someone has been in the industry for a minute, and you can tell when someone's new. You know, Scott had mentioned that there's quite a large foreign influence, Eastern European influence in this industry. And, you know, a lot of these guys are calling from voice over IP phones instead of from the US. You can go out and purchase software that detects that. It says, like, essentially, hey, you know, this carrier is calling from a different country. This is not United States based. And, like, yes, the driver may be in the United States, but if something happens and their home base is somewhere in Eastern Europe, we have no jurisdiction over there. If there's a claim and they got damages, and, you know, they're just some little company that, you know, can close up shop or just move on because, again, we have no jurisdiction, then you're SOL and you got another damaged truck, and, you know, either you pay for it out of pocket or you file it through your insurance company, which is, both of them are bad, right? You don't want to increase your premiums. You also don't want to pay for. I just got screwed on a legally double brokered load a couple months ago, $6,000 out of pocket because the guy that I hired, he was legit, but he went behind and re-subcontracted the load, and so the insurance company denied the claim. Boom, it's on Tarpon Transportation now. So you know, there are only so many procedures in place to vet these carriers, and as Scott mentioned, his staff spends a quarter of their day doing it. So does mine.
Yep.
You know, and we're constantly vetting these guys. We're constantly blocking these guys because you can just, you know, the information doesn't match up. Like I mentioned earlier, one power unit, yet on Super Dispatch it says you accepted 500 loads over the last 60 days. That, as the kids say, that math ain't mathin'. You know,
Right.
So
you could have a whole seminar, Matt, an hour-long seminar on how to properly vet these people and stuff.
I agree.
And people would love it because there are some good sites out there, websites and tools, you know, like you'd said, to check phone calls and whatnot. And that game's only going to get tougher until something federally is done. But
yeah, I think you just volunteered for another webinar.
No, I got a guy named Sam that works for us.
I'd be glad. I'll block off my whole day to talk about this.
Hey, so next question. I want to try and get two more in. One, I think, is actually an opportunity, Scott, for you to do a little advertisement, because there are a set of folks who are asking about you from a carrier perspective. If you're comfortable sharing, like, where you typically move, how many cars you move. There's a question as to why you only have 3 ratings on Super Dispatch. And so, like, to the extent you're comfortable sharing and doing a little promotion on yourself, like, there might be an opportunity. There's brokers on this call for sure that are asking, like, you know, they're on this call and they're like, maybe Scott can move my stuff.
Well, we and our insurance carrier is Great West, which is phenomenal. And back to the insurance, one quick thing is we do have brokerage insurance. And you'll find a lot of carriers don't actually have that. They just run the risk and will turn it in as a claim on their own if they own their own car haulers. And so there's a lot of car haulers out there that also broker freight without brokerage insurance. And it's tough to get and it's expensive, which is why Doug and I protect it so much. We both probably eat, you know, 30, 40, $50,000 a year in small damage. But as far as our company, Vonda handles that fleet every day. She's loyal to customers, but we have an in-house person that actually brokers freight in those 9 state areas besides our website. Our website is www.jandstransport.com, and you can go on there and you can get a rate. And our rates are accurate about 93%, 94% of the time. It's just impossible to have a dead perfect system across the whole country because of some anomalies. But as far as auctions, we cover everything, up and down the I-5, most of the main auctions. We try not to go in and out of Southern California too much with our own trucks, but we do have low customers that we go in there for, and then we either get a load out of there, Enterprise Rent-A-Car runs out of there, or we, we'll go to Vegas or somewhere. But pretty much if it's west of the Mississippi, we know somebody that can haul a load, or it can touch one of our trucks. The main states we're in are Washington, Idaho, Oregon, California, Nevada, Utah, Montana, Wyoming. That's about it. That's about it. We try and really keep our trucks in that small area because then they're full all the time. I mean,
Yeah,
our
we're
trucks
just doing circles.
our trucks don't bounce around much. But we always have room for more freight. But web wise, we can go anywhere in the country and you can go book it on there, and it takes about 5 minutes, and you use a credit card or PayPal and whatnot. So, but I mean, for the right money, we'll go anywhere. I mean, we've had trucks go out to the East Coast and back because some guy from one of our dealerships says, I'm going to go out and buy it at Manheim, Pennsylvania, the original auction or something. And so then we're like, this is what we need, and we'll cover about the full way out and part way back, so we know if we can only throw 4 or 5 pieces on coming home, we're covered. So
All right. Last question, and then we're gonna cut. AI. Do you see AI as being a thing that allows you to help vet carriers or automates the everyday tasks of a dispatcher, or do you see AI as not being anything at all?
we just had a meeting this morning on rates, and we used it to analyze a bunch of rates that we had already done in-house to see how close we were. And it was very, very good. I'm not very trustworthy in it yet. I'm kind of still, how much do I buy into it or not? So Doug might be better to talk about that, but we use it a little bit. I think we're still a year or two away from being completely trustworthy and using it more. But there's some couple people on our team that use it.
Cool. Doug, what do you
So
see?
when you refer to AI, I mean, Scott, you mentioned rates. I don't know where else it would necessarily fit in. And I've used like I mentioned earlier, I'll be on Instagram and I'll get like a ad, quote your shipment and get a rate in 30 seconds, and I'll use it, I'll compare it to my rates. And those rates they provide they're not real. They're impossible. Like it was a lane, I can't remember the lane, but it was, I think, I don't know, 1,400 miles, and they said they could move an F-150 on that lane for like $496. It's not a realistic thing. So I don't know how these automated or AI rates work. I don't know the formula or the algorithm they may use, but it's BS in my opinion. I've had people reach out to me and say like, hey man, I went on this website and I put in a rate, and then like 1,000 different people called me, but their rates were way higher than what this website said, and none of them sounded legit, and I could barely understand them, and I don't really feel comfortable using them, and I give them my rate, and they say, well, your rate's so much higher. It's like, well,
Because
yeah,
it's real.
it's a legitimate rate that covers the cost of transport, covers everything else that goes into transport. It's not just miles and cars. Like, there's operational costs, right? Like, we got to pay insurance. The driver's got to pay insurance. He's got maintenance on his truck. He's got to pay for fuel. So it, for someone that has no idea what they're doing, I could see them jumping on this, online AI, automatic, I got your quote in 20 seconds for you. But then when it, you know, when rubber meets the road and they don't know where anyone is and their car is supposed to be picked up on Monday and it's Friday and they can't get a call back, or if they do, they get fed some BS about why they're late and this, that, and the other. So I'm sure there is probably a place for AI in the industry. I just don't think it's anywhere close to being usable yet.
Yeah.
At least when it comes to rates, I'm not really sure else where AI would fit in. Maybe for some potential vetting processes, but that seems like pretty simple.
Yep.
Yeah, when I said we used it for rates, it was just to analyze the percentages and stuff. It wasn't to get a rate. We were checking our own, but
Okay.
yeah, no, yeah, the stuff you're talking about is legit. It's the old bait and swap. There's so many websites out there, which is the only reason I built one, because I was tired of people getting taken advantage of. Is that it's very hard to find. If you go to Auto Transport and enter your name and phone number, and you give your email or your phone number out, you will get 1,000 phone calls, and they will beat on you day and night until you cave in and just use one. It's horrible, and so trying to find a good trusted carrier out there is not as easy as it should be.
Okay, this is great. Thank you guys for the time. I thought this was an excellent session. If anybody listening from the audience wanted to reach out to either of you all, how would they do that? Maybe you could provide your email address. I don't know. Is that the best way to get in touch with you?
Yeah. Yeah.
Yeah.
Is there like a master thing I can
Just
type?
say it out loud for everybody, and then
Okay. My email is Doug, DOUG, at Tarpon, TARPON, transport.com. Again, that's
Okay.
Doug at tarpontransport.com.
and then
And
Scott.
we have one, it's dispatch at J and then Apple Nancy David and then S as in Scott transport.com. So dispatch at J and S transport.com.
Okay, very cool. Thank you
I want to
guys.
say really quickly, I know we've gone over time, but if we didn't get to your question during the live Q&A, don't worry. We're going to be compiling all the questions into a Q&A document and sending it out to attendees afterward, as well as Scott and Doug's contact information and a replay of this webinar.
Yep. And if you're looking for the full benchmark report, you can find it on our website. You can download it. Thank you to the more than, I don't know, 250 folks who attended today's webinar. Hopefully it was helpful for you all. We are Super Dispatch. We're focused on building the end-to-end transport platform for shippers, brokers, and carriers. And we're building some exciting stuff. And so thank you, Doug, and thank you, Scott and Vonda, for spending time with us and taking an hour and 4 minutes plus the prep time out of your day to make it happen.
Glad to be here.
Great. Yeah.
All right, guys. Have a great rest of your week.
Thank you.
And thank
All
you.
All right. Take care.
Bye.
Take care.